Here I want to show you how to compute average tax rate and marginal tax rate. Suppose that your company had $4,000 in taxable income. Now we want to compute how much tax you should pay, and then we can compute average tax rate. So this is a table of taxable income and tax rate for each bracket. As you can see, there are different brackets. Here in this example, we have 1, 2, 3, 4, 5, 6 brackets. So the first $50 of your taxable income will be taxed at 15%. Then the next $25 will be taxed at 25%. Then the next $25 will be taxed at 34%, and so on. So if this is 4,000, we cannot just jump here and say, okay, 4,000 will be taxed at 34%. You need to break it down into small parts based on the brackets. So the first $50, will be taxed at 15%. Then the next $25, it means 75 minus 50, right? The next 20, so the difference is 25. The next $25 will be taxed at 25%. Okay, so here let me compute the total amount. Okay, let me write the formula, is easier. I'm using just Excel to show you how we can use Excel for this calculation. But of course, you should know how to do it manually. There's another video you need to watch on how to do it using a piece of paper. So it's the same thing. Okay, so far the total is 75. So this 75 is the total of all these that I'm writing here. See, if I write 1, it will be 76, 2, 77. So it's just adding all these figures here, all these numbers here. Okay, then the next $25 means 70 minus 7. 100 minus 75. The next $25 will be taxed at 34%. Then the next $235 will be taxed at 39%. So how much in total we have so far? So we have computed the tax on $335 of our taxable income so far. So it's still, we need to compute more to reach to $4,000. Then the next one. The next one, if you compute, is the difference between 10,000 and 335 is 9,665, which is much more than 4,000. So we are computing the tax on $10,000, but actually we want to compute on $4,000. So what I do is I want to reach to 4,000. So 4,000 minus 335 is, so the last $3,665 will be taxed at 34%. And in total, so these are in total 4,000. That's all. So when you want to compute the tax, you need to break it. You need to break it down into smaller parts. How? The first $50 will be taxed at this. Then the next $25, then the next $25, then the next $235, and then the next $3,665, and in total this is 4,000. So our $4,000 is actually 50 plus 25 plus 25 plus is $4,000, right? Now, how much tax? 15% multiplied by 50. Then 25% multiplied by 25. Then 34% multiplied by 25. Then 39% multiplied by this. Then 34% multiplied by this. This is so on the first $50, you have to pay $7.5 tax. So this is the tax you have to pay, right? And this is the taxable income, but we broke it, broke it down into smaller parts, smaller ranges, brackets. So anyway, here the total amount, the total sum of all of these is $1,360 is the amount of tax I have to pay on $4,000 taxable income. So this is the total tax I have to pay. Now, what is my average tax rate? Average tax rate means $1,360, the amount of tax you have to pay divided by your taxable income. So in total, you have to pay 34% is the average tax here. But what is the marginal tax rate? Marginal tax rate means how much tax you have to pay if you earn $1 more. So if we earn $1 more, so far we have earned $4,000. We have $4,000 in our taxable income. If you have $1 more in your taxable income, how much tax you have to pay? If you have $1 more, you are still in this bracket and you have to pay 34%, right? So by chance in this question, and the average tax rate and marginal tax rate are the same, but actually in some cases they are not the same. So for marginal tax rate, see in which bracket you are. And if for example, you had $4,001, then in which bracket you are? Still in this bracket, right? So your marginal tax rate is 34%. It means if you earn $1 more, you have to pay 34% on this additional $1. And so this was average tax rate, which is amount of tax divided by the taxable income, and it's different from marginal tax rate. But in this example, by chance, the amount both are 34%. So which one is more important for decision making? For financial decision making, marginal tax rate is more important, because you want to know if you do something, if you, for example, invest on a new project, and if your taxable income increase because of your decision, your strategy, your action, how much extra tax you have to pay. So marginal tax rate is more important, because we want to make decision and we want to know the impact of our decision on our tax. So for financial decision making, we use marginal tax rate.